Hello everyone, Rick here with Hit and Run Candlesticks. How are we doing today? This is Wednesday, February 17th, 2021. Market is closed up now, and I went through some charts and I found a couple that I would like to post out here on YouTube. I also want to thank everyone from the Hit and Run Candlesticks trading room for your input. Several charts we're going to look at tonight came from you guys, so thank you very much for all your help. Let's see if we can get through this. First, let's start with the SPY. So, earlier today, I think I referred to the market today as crappy, and as far as I'm concerned, it was. It was just a rotten day until the end of the day, and then the market really started to pick up. Really, what today was just a lot of choppiness. And for me, anyway, choppiness is a bad day. I don't like choppiness in the market. However, as we pushed into the close, the market did stand up a little bit and straighten itself out. Bulls took control here. We did gap down today, and the lows, we came down below the T-line here, and we ended up closing above, well, opened below the T-line, ended up moving back down or down below it, and then we ended up closing up a little bit here. Not a bad day at the end of the day. Let's take a look at the 3-bar chart, and just using this big candle over here, you can see how if we put a line underneath that candle and then underneath today's first 2 bars on the 3-bar chart, all of a sudden you start to get a picture of where support is hanging out, obviously here today. But if we look right underneath this hammer, right underneath the body, underneath this candle where we closed, and you see the big wick down there, and then you see right here where we came up and left a wick up in here, that shooting star type chart pattern. And that just, after you get that drawn in there, it just makes a lot of sense to me. Using that as a support area. So go Bulls go. Maybe they continue to move up. So these 3 candles here, this is today's daily bar. This is what the 3-bar does, what we call the 3-bar chart, which is, it's just 130 minutes is what it is. And it breaks the candles down to 3 equal parts. So here today we gapped down and ended up with a inverted hammer in here, and then the next candle came in just ever so slightly a little bullish engulf, and then we had follow through back up through the T-line here. So anything above the T-line to me, I look as on the bullish side. I trade a lot with the T-line. I use that a lot of my charts, a lot of my scans, and just about in every single trade that I trade. Now, let's go back to the daily, and I just want to jump into that T2122 chart, the 4-week new high low ratio, and this is a 3-bar chart again. And I want to point out that what I'm watching for here is, see how the yellow line, we started coming down through the green line here and turning those green dots red. See how we started to do that? That's what might be starting to happen over here. You can see where we went down through those dots, the green dots. And then as we started moving up, we just couldn't get past them, and that's what held the dots red. We roll over here, and then the dots really start getting red over here. So what I'm watching for tomorrow or even Friday is, are we going to come up and are we going to run into that and then just start rolling over here? So I'll be watching this pretty close in this T2122. Or more than anything, what I'm going to do is I'll keep this in my mind. I'll know that this is set up like this, but then I'll watch the chart on the SPY. We can look at that 3-bar chart, And if we start to see that rollover, that might be where we're getting some confirmation when we get with that T2122 rolling over. If we start seeing price rollover in the chart, we may look at that as confirmation to the downside. Until then, though, until I see the chart actually break down, I have to remain bullish. Price ended up above the T-line today. The T-line is above the 17 EMA, or what we call our Trendicator, and the dots are still green. The 50-period moving average is still up. So I'm going to have to go with the bulls still own this market. A little bit sloppy in here. They might be getting a little bit lazy, but the bulls still own this market. All right, I'm going to grab a drink of water. I'll be right back, and let's take a look at some charts. All righty. Thanks again. Thanks for waiting on me. Let's be reminded that we're not finished with earnings yet. So, be very cautious. I know I am. I'm being very cautious what I buy, just in case there's some earnings out there that I need to watch out for. I don't like buying something and holding through earnings. I don't mind buying and running up to earnings or after earnings, buying it there, but I just don't like the earnings surprise. I've found that the ones that surprise in the wrong direction are the ones that I remember the most, and I'd rather not remember those. So I typically don't hold through earnings. Another thing that I do, and I mentioned this early on this video, is I talked about the T-line and how I use it on an awful lot of my charts. And I do. If you've noticed in my previous videos, my stops, where I like the charts, not necessarily where the actual stops are when the order is placed, but when I'm looking at the chart and trying to decide if I like the chart, if I want to trade the chart, I'm always right about at or sometimes above, but majority of the times right at or just slightly below the T-line. But there are some times above. In fact, I think there are a couple of them tonight that are above the T-line. Over the years, this black line right here, and by the way, it's just the 8 exponential moving average. I have found this to be extremely useful with my style of trading. And when I'm looking at charts, when I'm looking for charts, I'm looking for the setups that are poised or set up to move higher, not lower. We're talking about longs right now, and I'm often asked, why don't I come down and use, say, the pivot low, something like that? Well, the reason I don't is I work very hard on trying to find those charts that are ready to go up, not go down. Not charts that, here, let's move this back down. This might not be the best one to do this because that pivot low is so doggone low down there. But we'll look at it anyway. So when I'm looking for charts, I'm not looking for charts that just hang out, go down, and then go up. I'm not looking for that. I don't mind charts if they want to hang out in this area. I don't mind that at all. But I'm not interested if they go down. I'm only interested in the ones that go up. So, like I said, I work very hard on looking at these charts and coming up with the charts that have a higher probability of going up rather than going down. And it's just simply taking the trend, price action, and chart patterns in account, along with taking the overall market in account. So let's take this chart, DXCM. Here we've rallied up. The bears took control right in here, and you can see they even took control, showing some weakness and follow through. But then the bulls took it back, and then bang. Well, bulls took it back, I guess. And then bang, big old gap down here. Well, we weren't looking to buy it in here. It was not set up. We didn't have the buy signals or the chart pattern. Well, all of a sudden here, on what day was this? On the 12th, the bears gapped us down. Well, the bulls brought us back up for a belt hold. Now, a belt hold only needs to close up in this area right here. But what happened here is we continued to move up, putting in a monster bullish engulf. And when we're looking at price action, what we like to do is you get that, say in this case, that bullish engulf like this. Then what we like to see is a little bit of rest. Love to see the rest. And then what we want is to see follow through. When we start to see follow through, that's a sign that the bulls are stepping back in and we're ready to move up. Well, here we've got this belt hold, turn bullish engulf, and then we ended up with a bearish Hiromi, which really it's still let's just call it a Hiromi, not a bullish Hiromi, not a bearish Hiromi, just a Hiromi. And what it is just a candle that has formed inside of this bullish engulf here. And in this case, we formed and finished in the top half of this candle, holding above the T-line. The next day, which is today, so we open up in here and we start moving up, and you see we've broken out now. We've taken out, there we go, let's do that. See, we've taken out this belt hold bullish engulf candle. So that shows me that the buyers are still very much into the chart. So now what I'm looking for is that little bit of rest in here. A little bit of rest. I would love to see that. And then we'll watch for those buyers to step in, and that's where we may look to buy this chart. What is that? DXCM. And we'll look for that to move up a little higher and maybe up in here to the 450 area after buying it somewhere in the 410, 415, something like that area here. Okay, another chart we're looking at, and I apologize, I'm trying not to talk very loud. I hope that it's coming across in the video. I'm trying to rest my voice a little bit. I've had this really rough time, too much talking, and I'm actually getting over a little bit of a cold, so makes my voice want to walk away from me a little bit. All right, so on AIG, this is one from one of the members in the trading room. Again, thank you very much for posting this out there. Here we pop up and we pull back to the 50. We pop up again, and this area right in here, right in there, I'm going to look at that as a little bit of resistance. Well, here we had this nice bullish candle, and then we gapped over it, and that just looks to me like a good place for resistance. Now, I'm not one for putting my line at the very, very top, my resistant line up there. I'm not one for doing that. I try to come in here and find as many touches as possible. And if we put this line across, a touch here, we get a touch here and a touch here. Actually, I could probably even drop this down just a little bit and be just as happy with that area and get a couple more touches in there. And maybe that's what, yeah, you know what? That's what I'm going to do, because that's where this candle stopped. This bullish candle stopped here. So we'll just leave that right there. So from where we stopped, we went right into resistance. Boom, shut it down. Well, then the next day, here we open up and we travel up a little bit and then back down. Well, if you look at this chart, this is absolutely my favorite chart pattern. And it doesn't matter whether it's in, say, the rounded bottom breakout. The rounded bottom breakout is a strategy. And inside that strategy, we look for areas to buy. And what I look for 99% of the time is the 3/8 trap. But to get to the 3/8 trap, what I want to see is this run up and this rest, just like this, up and rest. Now, I do wish that it was that clean. I do wish that it was just that simple. So here we're going to run up. I wish it was that simple where we just pull back and then the buyers just step in, just like that. Well, it's not that simple. There's all kinds of little things that can happen in here, such as this candle right there. Well, let's do it this way. Right in there. See that low right there? We come down and we look at this, and a lot of people's going to look at this. Oh, we have an evening star up here. I don't deny that we had a little gap up here, a doji, and a bearish candle. I don't deny that. I don't deny that we've got a double top up here. But until you get follow through, you have nothing. You have absolutely nothing, just a whole lot of noise. So here we pulled back and we actually tested that. We actually tested that line pretty well. May not be happy with that candle, but we tested it. The next day, again, may not be happy with that candle, but we tested it. And then the next day here, we pop up a little bit, and now we have a little morning star candle. And I do know that this is not so-called a book perfect, but it's the same thing as a morning star signal. And then today, we opened up a little bit lower, and the bulls just rallied on this thing and just broke us out of this area. Pretty fairly good volume. So, like I said, I wish this chart pattern was clean like this, and there you go. But it's not. So many times there's just a bunch of trash in this area. Noise, it just is. After a little bit of trading and after working through a ton of charts, I've just been able to smooth this out a little bit and find those charts that just might work out. Put things in my favor. Put the chart in my favor. So that's all we've done here. Now, I'm going to hang out here, and I'm sorry, this is going to end up being a little bit of a longer video, it looks like, because I'm trying to answer some questions that have been asked of me. One that breakout and moving up, the T line. So, I think when we were looking at the SPY, I think I talked about this. As I'm looking for charts, I'm not looking for charts that say move into this area and then move down. I'm not looking for them to come down and test something down here. I'm not looking at that at all. I'm looking for charts that it's okay to hang in this area. It is. We're on the inside day of this big bullish engulf after a morning star signal. So I'm okay with that. But I don't want it to go down. I want it to go up. So this is where it does take some study on charts, getting comfortable with finding these charts and being picky about not looking at every chart under the sun, and just finding the ones that meet your criteria. And this is what I'm doing. I'm looking for charts that meet this criteria, and then from there I set up an area where to buy it at, and that's just simply basically around this candle or around a cluster of candles. And then my stop is always around that T-line area, because what I'm looking for is charts to, say, like right in here, move above the T-line and then move higher. That's simple. If we come over here, we move above the T-line and we move higher. We did come back a little bit, but here we just moved up. This would be a good example right here. Here we're down. We kind of bounce around along the T-line here after there's that morning star signal again. Up, we kind of bounce around here with a couple of dojis. A bullish engulf. Alrighty, let's rock and roll. You see how we went up? That would have been a nice swing. Here's where we pull back. Here's the buy, and we swing up. And that's the chart I'm looking for. I'm looking for those charts that give me the clues that we're going to move, or what? Well, it's not a clue if we're moving over the T-line. I'm looking for charts that it's a fact they've come back over that T-line, or they're holding over the T-line. And then I'm looking for those entries followed by that swing up like this. So here's a case where we've come over the T-line. We've consolidated. The bulls stepped back in with the morning star signal, the bullish engulf. Now that they've consolidated or rested, I'm looking for that move to continue. So I hope that answered a couple of questions on the T-line, why and where I put my stops, and why I don't always use a pivot low. Here's a chart. This is a little bit out of my wheelhouse, not my typical chart to trade, but I do like the way the chart is setting up down here. It is still very much in a downtrend, no question about it. Still very much in a downtrend. And like I said, it's not normally a stock that I look at to buy. I usually want it to rally up and then pull back. But I'm going to take a look at this one down here. We'll see what it does tomorrow. So here we push to the downside. PFE is the chart, by the way. We pushed to the downside, and the buyers brought it back up a little bit. And then we just went sideways, a little bit to the downside. And here we have this doji continuation pattern. A bullish Hiromi, doji continuation pattern, a bullish engulf here. We close over the T-line. So what I'm looking for is follow through over the T-line here, and then to move up a bit. And maybe we get to that 50-period moving average up here. And then we'll reevaluate the chart at that point. CB, let me grab a water. Be right back. Alrighty. Again, thanks for waiting for me. So CB is another one of these charts. This was given to me by one of the members in the Hit and Run Candlesticks trading room. Thanks again. So here we've just kind of gone sideways. The sellers got a hold of it, and the buyers brought it back. Well, remember, this is what I'm looking for right here. Rally up, and then I'm looking for this rest, and then a buy. Well, when we see this sideways chart pattern, this is one of the chart patterns that we go after a lot. And we call this a pop out of the box. The reason we do that is if you look at it, you can a tight little box around it, very narrow range, right? So we have this very narrow range, and we have these areas where the sellers could have just really came on board and taken this out, but rather the bulls held us up in here. So that's why I'm putting that line up there at 163.40ish, and then we're going to wrap this box. We're going to make the box, and it's going to be the buy box. So what we're looking for here are the buyers to give us a clue. We're not in it, so we're looking for that clue. Another inside day, buyers popping it up or breaking it out. That's where we get the pop in the pop out of the box. That would be the buy area as well. Of course, we'll always adjust the stop depending on where we buy it here. But this is very typical what we're looking for. And again, I'm not looking for the pivot low for a stop. I think by focusing on solid trending charts, charts that show a run or positive trading, and then charts that show what is simply just a rest. All it is a rest, a slight profit-taking pullback, nothing dramatic, no big selling. Then I think that puts the probabilities in our favor for a stock moving up. No guarantees to that, but this is how we're able to keep our stops somewhat tight and not have to always be chasing charts that maybe open up in here, and we have to follow it to the downside because we might put our stop down here. Maybe it doesn't hit the stop, and then we have to wait till it comes back up. I just don't do that. Here's another clue. When the market might not be in our favor. But if we're looking at these charts, and if, say, tomorrow a lot of these charts are dropping down below that red line, well, we might want to take a look at the market, because there's not too many reasons why the charts we're looking at would fail the way fail in that way. And having the market maybe falling apart or showing weakness would be a good sign of why that's happening. So whenever I see that happen to multiple charts that we're looking at, I have to go back and reevaluate the market, because the market may be in shambles like it was today until the end of the day. Okay, these next few charts, I'm going to zip through these pretty quick, okay? Here is SNAP, S-N-A-P. You can see we've rallied up off the 50. We rallied up. We started to put that rest in there, consolidation, tight little box area right here on the T-line. So I wanted to bounce off that T-line, and I wanted to bounce up, not halfway here and then go down. So I'm putting my stop just slightly underneath the T-line. Now, keep in mind that if we buy this, what we'll do is adjust that stop based on where we buy it and the market conditions. PIN is another chart given to us here by a member here in the trading room. In fact, there's a couple of them that even bought this here. Here we've rallied up. Here we've pulled back. A nice bullish engulf here, closing above the T-line. And now we've got this inside day or days inside the bullish engulf. Well, I'm looking for that follow through on this one. So I want to see that follow through. That's where I'll look to buy. And then we'll use a stop around that 117.50. Again, we'll adjust that based on our buy. I also want to mention here that, like always, what we'll do is take profits on the way up into strength as the chart moves up. Citigroup is setting up pretty nice. Here we've rallied to the top, formed a top up here. Sellers took control, and now the buyers have taken control back. So the buyers rallied up. They went sideways. This would have been a great buy, by the way, right in here, but we totally missed that. So here we gapped up, and now we've actually had 2 bars of a testing. So we gap up, we come back for a test. Today's bar opens up, and we test in this area, ending up with a nice little bullish candle here. So we're looking for another inside day or inside the box for a buy in that area for it to swing to the upside. Around 63.50 will be the stop. Again, we'll adjust that depending where we buy it. KR may be setting up. Kroger Company. Kroger, look at this. We've been up, and then it just took a big old nosedive to the downside. Traveled under the 50-period moving average for some time, and then here it just rallied up big time, and it's now pulled back. Well, what I like about this chart is we have the low, and then we've just had this little bit of an uptrend here, and we have now broken out of this high bar. So we have a low. This is our high bar right here, right there. So we've got a low, high, and then all this in here just sort of just went nowhere, just sideways, tight range. I just noticed it here, didn't even notice it before. Nice little Morningstar signal. And here, now we've broken out of that high bar. So I'm looking at this as a positive chart pattern setup here. And entry inside the green box. We'll look at 33.70, 33.65 as a stop, again, depending on where the purchase is actually made at. And we might even look for that breakout buy on this. And the last chart I have, and again, thank you everybody for hanging around. I do appreciate it. Hope to see you in the trading room tomorrow. Hey, also a reminder, if you've not subscribed to our YouTube channel, click that subscribe button. Click on that and go ahead and subscribe. It's free, it's painless, and you'll be notified of our videos we put out. And if you like what you see there, give us that thumbs up. Let us know, okay? Thank you. Okay, UNG. UNG's been in a downtrend. Got a bottom that's been constructed in here. And here we've broken out right here is what there we go. That's what I'm looking at for that breakout. So here we've broken out and we just, that's ugly. Bearish, bullish, bearish, bullish, bearish. Make your mind up. Get over it, right? Really? Get with this thing. Get with the program. Well, all of a sudden, not today, but yesterday, all of a sudden, something happened. We gapped up and we held above these candles. So let's put this line up there. I'm going to put it right there. So we held, and then today we actually held up here. So what this is telling me is the buyers finally broke through this junky chart. They broke through, and now they're holding it up here with about 1085, 1090 as a stop. We're looking for that inside day. The buyers to step in here and see if they can't swing that up higher, looking for one of those little multi-day swings on this chart. All right. Hey, again, this was Rick with Hit Run Candlesticks. Thank you so much for watching our YouTube video. I do appreciate it. Oh, before I forget, yeah, CCL. Somebody asked me to talk about that. So CCL, oh man, I should have talked about this early on. So CCL, this came up on our scan today, and we bought this early on. Nice gap up yesterday, closed well. So here's a typical inside day. We bought this, and I believe this was on the video, not yesterday, but the day before, or maybe somewhere around there. Anyway, we bought this. We ended up taking half off up here around this 24.13 mark, still holding half. Nice trade. Currently up 9%. It was up a bit more when we took the first half off. I'm looking for this to break out, and we'll follow this up for a little bit, and we'll take profits when it gets up here a ways. All right, I'm out of here now. Thank you very much, everybody. Have a wonderful, wonderful evening, and we'll see you all tomorrow in the trading room, hopefully. Thank you.